yes, but I have no regrets.
Welcome to This Week in Real Estate with Jonathan Harmon and Bryan Nale, your local experts on all things real estate in Middle Tennessee. Listen in as they discuss the current state of the market, the latest trends, and have a little fun while doing it. We do want to say the opinions voiced on this podcast are for general information only and not intended to provide specific advice or recommendations for any individuals. All right, y'all, we're back with another week of This Week in Real Estate where we're talking about the Prince in principle. That was a missy.
I mean, probably Purple Rain. I mean, that's a canned answer. Probably a lot of people's.
Yeah, it's a good one.
It is a good song.
I really like Little Red Corvette, mostly because I can do a little
Yeah.
dance with it.
Yeah. That's a good one, too.
Yeah,
Yeah.
that's a good one.
I got a trivia question.
Okay.
Who played, this is a David Bowie song. Who played the guitar solo on Let's Dance?
Is it Prince?
No.
Oh, okay. I just figured he tied in.
You'd think.
It was worth a shot. No, I have no idea.
I don't know why there's a David Bowie Prince connection. Probably because I've been up since 3 o'clock this morning. But Stevie Ray Vaughan.
Oh, really?
Yeah. And Stevie Ray Vaughan was invited to go on tour with David Bowie for that tour, for that album. And he was like, you know what? I think I'm pretty close to making it a name for myself. I'm going to pass on the paycheck and bet on myself one more time to make it. And he did.
Yeah.
Good for him.
He bet on himself and he made it.
Yeah. Gone too soon.
Way too soon.
Yep. For sure. All right. Well, let's get rolling. We had a heck of a weekend here at Cedar Glade. It is Wednesday and I'm finally mostly recovered. So if you were not around this weekend, you missed a lot, and it was super fun. We are going to talk a little bit today about building permits. That's my headline, and we're going to talk about what the Fed did last week, rather. Last week, yeah. A little bit of a, not necessarily a surprise.
Not at all of a surprise.
There was debate on this one or that one type thing.
Right.
But to me, at least, the market reaction is a little surprising.
Yeah.
And hopefully you'll be able to explain that. And then we got some other fun stuff planned. So it's gonna be a good show. You excited?
Yeah.
Let's do this. All right. Headline. All right. So got the market graphics research monthly builder report. Market Graphics, as you may or may not know, is a company based in Nashville with Mr. Edsel Charles at its helm. And they follow building permits very specifically for, it's a bunch of markets now. It used to just kind of be the Nashville MSA and a few close by. But it's a whole bunch of markets now. And not surprisingly, the Nashville MSA is kind of, we're actually not leading. We're second out of all the markets that they follow: St. Louis, Indianapolis, Greensboro, Knoxville, Memphis, Kansas City, Huntsville, Louisville. I mean, lots of kind of complementary markets. The market that is leading the area, and so Nashville MSA, they look at 11 counties. There's technically 10 in the Nashville MSA, but they lump Montgomery County in with that, and some do, some don't. They do in their particular case. Although in this particular report, they separated it out by itself. Leading the charge in all the markets that they watch right now is the they call it a North and South Carolina coastal region. It's 9 counties over that straddles the North and South Carolina border.
Yeah.
As of right now, through the month of the end of July, is where these numbers fall. 10,882 building permits pulled in that coastal region, to Nashville MSA 9,514. So we're just behind that coastal Carolina area. And just kind of comparing that, you look at Huntsville, for example, 3,697. So we're way ahead of them. The next closest is Jacksonville, Florida, 9,266. So again, we're just barely ahead of them. We are up on number of permits pulled from last year. At the same time, 13.3%. So there's more building going on. This kind of fits the same narrative that we've had for a while. As rates went up, as the mortgage rates went up, everybody kind of slowed down. Over this year, we've seen kind of a return to that normalcy. So it's been interesting. Of course, the spread of price fits exactly what we're looking at in the 9 counties that we're talking about. Immediate Davidson and the counties that touch it. The current inventory audit right now, 425 to 625 is where newly finished unoccupied homes, 621 of them in the 425 to 625 price range in those 11 counties. So that's where the bulk of the inventory is. 325 to 425, there's actually 611 of those in that.
Is that a lot of townhouses, you think?
Area? I would say, yeah.
Yeah.
I mean, especially at that price point, it almost has to be. Stuff that's under construction right now, 325 to 425, 1,500 of those in that area, 1,300 in the price just above that, 425 to 625. So the vast majority of the homes in our Nashville MSA are going to be between 325 and 625, so that $300,000.
Yeah, and I bet you there's a lot of variation too as you look in each one of those counties and what type of homes are being built. Like I think in the more dense areas, Williamson County, parts of Williamson County, parts of Rutherford County, definitely Davidson, probably parts of Wilson County. You're seeing a lot more of that high density with the townhomes and the almost condos. I bet you're seeing a lot more in there, but that doesn't necessarily mean anything on the price point, because I know in Williamson County you'll have some townhomes that'll probably be in that second tier of price.
Well, I would say that Williamson County is probably not contributing to the 325 to 425 at all. Yeah, I doubt that there's anything in there. And honestly, there's probably not a lot in Williamson or Davidson that's even in that 425 to 625 range. They're going to definitely be hitting some of those higher numbers.
Yeah.
Interestingly, the 1.4 million homes under construction and current unoccupied homes is higher than the 925 to 1.4 million. So again, we've talked about this before. The significantly higher priced homes, there's more of those being built than that top range sub 1 million.
Yeah.
And that's Rutherford County, that's Williamson County, it's all of those. And oddly enough, they seem to be relatively insulated activity wise from interest rate drops or changes, fluctuations, simply because a lot of folks, believe it or not, pay cash for those.
Yeah.
Or use some other alternative form of financing.
Or they can just cash flow the payment. They're not as concerned about that, or they're not as sensitive. Maybe not concerned is the right word, but maybe not as sensitive to the payments at a rate where we've seen rates here lately.
Yeah, I've always found that interesting that and Rutherford is in that conversation now, which is super weird.
Yeah.
15 years ago when I got into the business,
we're there though.
There was like 3 $1 million homes in Rutherford County.
Yeah.
Period. Yeah. End of story.
That's it. That is it. And they are big houses.
And they were big and had a ton of land with them.
Yeah.
And when one came on the market, you were like, "Whoa, there's $1 million house!"
What?
Yeah.
Yeah.
Now it's like, oh yeah, there's another one, and there's whole neighborhoods of them.
Yeah.
It's crazy. So, all right. So that's kind of where we are. Inventory is sitting a little longer. Kind of some anecdotes here. Inventory sitting a little longer. We've got, showings are slow, slow.
Yeah.
Pulled those numbers last week, I guess it was, or 2 weeks ago, and we're just people are kind of chilling right now.
Yeah, and I think that's a little bit of a seasonality, but it's also a little bit of a rates are coming down.
And election cycle.
All of those things are kind of creating a perfect storm for a pretty quiet fall, it feels like.
Yep, for sure. Yeah, we had our summer boom.
Yeah.
It was very short.
It was quick
this year.
Short, sweet. Yeah.
I don't know about sweet. It was hectic there for about 6 weeks.
For 6 weeks, I felt like it was back.
Yeah. And then here we are.
Here we are.
So, I don't want to get political or anything, but it is always fascinating to me how people just pause during this time. This is the 4th election cycle I've been through in this career. And people just hold their breath. Yeah. And one side says, if blah, blah, blah wins, then blah, 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 and we're all going to die. And then the other one says, well, if blah, blah, blah wins, then we're all going to, have to move out of the country and nobody's going to be able to get a house. Yeah. And the reality is on the day after the election, after election day, both sides are going to be like, oh, well, okay.
All right, let's get to work.
And it happens every time.
Yeah. Without fail.
So anyway, it'll be interesting to see that happen. Moral of the story, I said this as one of my pro tips about being patient a couple weeks ago. That is still the case. So, unless you just have to sell that house, if you've got it listed right now, we've seen more price reductions in the last month or so. RealTracs reports on that. Yeah. It's been insane how many people are just cutting the price. If you need to sell it, then cut the price.
Then do what you have to do.
Right. But otherwise, just
hang tight.
If you can sit on it, it could keep several $1,000s in your pocket.
Yeah. I think that's good advice.
Yeah. And it's hard for realtors to say it because it feels good to say that we sold it in 3 weeks or 2 weeks or whatever. But
at the end of the day, you're building relationships with your clients and giving them the right advice is huge. At the same time, too, if you're thinking about buying, well, do you want to buy now when rates might come down? Maybe this time or maybe fast forward 6 months to the spring, and we're talking about rates lower than where they are right now. Should you wait for that or should you buy now? At the end of the day, buy a house when it's right for you to buy a house.
And the house that's right for you. Don't get in a hurry.
Because right now you can shop. Right now with the days on market where they are, you can absolutely still shop. Now in the spring, as we're ramping up for a busy summer season and rates are lower, will you be able to shop? I don't know. Maybe not.
And here's the thing, Bryan. It's not like with the volatility that we have and all of the different factors that are playing into pricing and rates and the market conditions and negotiability and all of that. There's so many different things happening at one time. Yeah. If we were manipulating one variable, right? Go back to your high school science class. If you manipulate one variable, then we can do that, and I can predict what's going to happen. Right. But when we've got 10 different variables, extremely volatile, all at the same time, I can't tell you what's going to happen next week, let alone in the spring.
Right. Exactly.
So it's a gamble to wait. It's a gamble to move.
Yeah. At the end of the day, what we have to remember and what I want my clients to remember is this is home. It's shelter. It's do we need to pay attention to the money and the investment aspect of it? Yes, we do.
For sure.
We cannot turn a blind eye to that and be aware of the financial consequences of the decisions that we make or our clients make, because those do matter. But at the end of the day, this isn't a commodity. It is a home. It's where you raise your family. It's where you live your life, and those things matter too.
And the only way that you know that you time the market the right way is to see it after the fact.
You can't,
so it's too late at that point.
You can't know it in advance. Yeah, if you think you timed the market right, then you're a week off. I mean, come on.
Yeah, or 3 hours off sometimes. Yeah, exactly. So anyway, all right. So there you go. All right, Trent. What? Yes. Efficiency at its finest.
That's a studio right there. Studio apartment.
Is that a leaf blower inside the tub?
What is that?
That red thing? Here's my only problem with this. I'm not very tall, but I would absolutely hit my head.
Yeah.
Yeah. Okay.
This is real.
I mean, layers of mattresses on the top bunk.
I think that's a feather topper.
Feather
yeah, I think that's a feather topper. Oh, wow. I mean, look, hey, kudos to this person for seeing a challenge, figuring it out.
I believe there's a walk-in shower to the right of this picture. See the?
Oh, I do see the base.
There's a glass tile.
You're right. There's a frame right there too.
Yeah.
at the top.
So you don't have to worry about hitting your head because you're going to do your shower over there to the right. You're going to do the bath over here. So as long as you're just careful when you get
Dude,
out of the
I
tub,
would
you're
put
good.
a trap door in that thing and just be able to go straight from bed into the
Speaking
tub.
of hitting head, man, I hit my head on the back door of the Hillbilly Hilton, and I'm pretty sure I gave myself a concussion.
Lacey did the same thing.
Within 5 minutes of me doing it.
Yeah, and she fell on her rear end.
I fell on my knees. Like I buckled.
Did you flip the sign up afterwards?
There's a sign?
Yeah.
What's the sign say?
It says if you hit your head on the door, flip this sign up.
I didn't see the sign.
Okay, well the sign underneath it says duck. Yeah.
Yeah.
All right, that's a good one, Trent.
You know what? I'll say one thing and to close out. They really, really need to come in and treat that wood.
It might be pressure treated. It's hard to tell from
It's
this.
hard to tell.
Alrighty.
That's lovely.
Market movers.
Entertain
No.
with that one. All right, market movers. What you got?
So I think we're all aware that the Federal Reserve met last week and that they decided to cut the short-term interest rates 50 basis points. So what I can't tell you how many phone calls and conversations I have with people on Wednesday. Hey, does this mean it's time for me to refi? And what does this do to mortgage rates? What are mortgage rates now since they cut rates 50 basis points? And just the amount of people who felt like, well, if interest rates going into today were 6.75, now they're 6.25. And that's just not how it works. And the reality is Wall Street investors and traders who are buying bonds and mortgage-backed securities they're trading the rumor and selling the headline. So when we talk about headlines, last week's big headline was the Fed cut rate 50 basis points, but that's the short-term rate, and what we're starting to see is the interest yield curve, like it's been inverted. We're starting to see that kind of come back in a more natural landscape where you're seeing savings on a 15-year term. I quoted somebody a 15-year term yesterday, and I won't say what rate they got, but when I quoted it, surprised at how much lower it was than a 30-year term. The same loan amount, same loan to values, the 15-year.
But that's how it's supposed to be, right?
That's how it's supposed to be,
Yeah.
and that's a sign that the interest, that yield curve is returning to some normalcy. If it was inverted, does that mean it's verted? I don't know. That's a bad
Reverted.
joke. Reverted.
Yeah.
Bad joke.
Converted.
Converted, complex. I don't know. It's complex for sure. But the mortgage rates had basically been falling for a month.
Outverted.
And so leading into the Fed's meeting. So what we're seeing since then is a correction. And that's where, you probably have some investors who feel like maybe mortgage rates had fallen a little too far for a 50 basis point cut. Let's wait and see what the Fed says. Let's wait and see what some of the next reports show. And so far, since the Fed's met, interest rates have done for mortgages have done nothing but kind of trickle back up a little bit. And so for those who were trying to time the market, somebody who locked the Friday or the Monday before the Fed meeting, they got the best rate right now. Now, what we'll see over the next few weeks is some more unemployment reports come out and some more inflation reports come out and the consumer price index and those types of things. And those are going to really tell the leaves of, will the Fed cut rates again this year or will they continue to wait and see?
Now, their talk was several more times this year.
A couple more cuts. So
Yeah.
the big question was, is it going to be 75 or 100 basis points cut by the end of the year? Well, we got 50 in September. So does that mean we might get one more 25, two more 25s, one more 50?
Another 50. Yeah.
So the Fed has been a little dovish, and they're a little kind of like, we're watching the reports, but we're definitely not ruling out more cuts. We're not saying that we're going to. So right now, there's no real tea leaves for the market to be reading. We're waiting on the data to kind of tell us what the Fed's next move might be.
Let me devil's advocate this for a minute. So is it also possible that the powers that be that set mortgage rates and that, is it also possible that they see the writing on the wall as the Fed's going to cut, potentially a total of 1.5 or 150 total basis points, right? And so with this last drop, with this 50 basis points drop, are they saying, all right, this is our last chance to lock in some folks at this higher rate before we really start seeing it, and the pressure is on us to drop our rates? And so therefore, this is their last little money grab at the higher.
That's a great question.
At the higher
and it could be. And I think where you would see that would be continuing to see a wider spread between the 10-year Treasury and mortgage-backed securities. Because at the end of the day, what lenders and banks are trying to do is attract investor dollars.
Right.
And if we're not priced right according to what kind of return I can get on a 10-year Treasury or securities or whatever kind of my appetite for risk is, we have to price mortgages in line with that in order to sell the investment. We have to offer a certain, so maybe that's a good question.
And I mean, they're trying to make up some ground from 2 years ago. Right. When it was wonky the other direction.
But I'll say this: your lenders, the banks and the mortgage companies, independent mortgage companies, they also have to watch out for what's called a early payoff. And so if we write a mortgage and we sell it to PHH, Standard Mortgage, PennyMac, whoever's servicing the mortgage, if that mortgage gets paid off before the 6 payments are received, then that investor sells that mortgage back to the lender that wrote the mortgage. And so you've got to be careful if you're trying to get one last money grab in at higher rates, because your investors are going to see that and be like, well, why would we want to buy this? You're going to have a hard time selling it because it's like, well, we know it's going to get refinanced within this period.
But maybe
of time.
not, because if we're only talking about a drop of 75 basis points,
it could absolutely.
That's not gonna spark a huge refi boom.
It could. I mean, if you see
0.75,
yeah,
no way.
Yeah, it could. I think there's going to be some people who are going to be a little bit hungry for payment savings.
But my goodness, 0.75. What's your time to repay that? It's forever to repay that. Are you going to say?
Are we talking about the same thing? We're talking about like a difference between a 6.75 and a 6.0.
6.0, yeah. I mean, it's going to take you 4 or 5 years to make up the cost of that.
Not necessarily. No, we would have to run some numbers and different price points and different fee strategies and structures. But you got to remember too that there's always discount points at play too. There's so many variables in there. Does it make sense to refi? Well, if I want to go ahead and get the payment that I want long term, I'll maybe throw in some discount points, and that might affect my break even point. Mm-hmm. But because it's driving my payment even lower, and I need the payment savings because
I bought it. I married the house and dated the rate at too high of a
Okay,
that's fair.
Or the recession fears are settling in, and I'm seeing my neighbors getting laid off, and I'm like, man, if I can save
my job's doing crazy stuff.
I need to lock in the savings now while I can, and maybe not wait for. So I think that's part of it too. And if
I still don't think it sparks a refi boom.
It maybe not, but back to the kind of the original point I was making, if the market would dictate right now, rates should be 6.75, and I'm thinking that within the 6 months it may drop to 6, but I'm trying to sell that out there at 7. Then there's a lot more likely chance that the market will catch up to me, and before that 6-month EPO period is passed, that mortgage is getting paid off, and I'm taking a hit.
Mm-hmm. No, that makes sense. Yeah, it makes sense. Okay. Interesting stuff.
Yeah, market movers. So the big market movers is just the same things that we've been saying really for 2 years. Watch the inflation reports, watch the jobs reports, and those are going to give you the tea leaves on what the Fed's going to do between now and December, and the end of the year.
I think your other big market mover right now, like the single biggest market mover, even more so than rates and all of that, is the election cycle.
Oh yeah, the market not mover, immobile. The market immobile. Yeah.
But here's the thing. Again, let's talk about that for 1 second. If you are considering buying, okay, there are houses that are sitting there and aging right now because stuff is, in my opinion, artificially not moving. So if you're in the market to buy, like if this is the time for you, man, let's talk. Yeah. Because there are opportunities right now, and there are ways that we can go and try to capitalize on some inactivity.
Yeah, absolutely.
And don't be afraid of where we are. It really doesn't matter if it's blue or red.
Yeah.
I mean, it really doesn't. Not ultimately, it doesn't. Yeah. And, the more contentious it gets and the more scary the rhetoric gets and the more that they snip at each other and bite and snarl, the more hesitation and fear there is, the more opportunity there is for you.
When they zig, you zag, right?
This is it. This is your chance.
Yeah. Yeah. I think you're right.
So don't be afraid.
Yeah.
No.
That's just it is a pro tip, but we got another pro tip for
Yeah.
later. So let's go to that.
Yeah.
Shiny penny first.
Penny. I was supposed to come up with it on
the fly.
Yeah. So shiny penny is that, and it is a shiny penny, is that this election cycle is getting contentious. And as weird as that sounds, that is a shiny penny.
Man, I don't like that.
I mean, but here's the thing: if you've got the stones to jump in, there's opportunities to be had right now.
Yeah,
and we're seeing it. We're seeing houses that should not sit on the market for 3, 4, 5 months right now, and they are there.
You said months, where I thought you were about to say weeks.
No,
that's the market we're in,
months.
folks. That's where we are.
And if those properties are sitting there, those people are looking to make a deal on it. They just need somebody to come look.
Yeah.
And they're great houses.
Because if that person doesn't need to sell, they're probably just going to pull the listing, right?
They're going to pull the listing. Maybe they'll relist it in the spring. We don't know.
Get some fresh pictures, paint some walls. And,
but otherwise, man, jump in there. Don't be afraid. That's the shiny penny. There are opportunities to be had right now. We just have to uncover them.
Yeah.
And they are there.
Yeah. So put yourself in position for them, right?
Let's talk.
Yeah.
Let's look.
Before we get into pro tip, I should save that. What I was about to say for pro tip.
All right.
He's been waiting.
My pro tip. My pro tip is going to be aimed very specifically at folks that hold at our colleagues.
Yeah.
At your colleagues, at my colleagues. I have specific words that I'd like to use on this. Yeah. However, this is a family-friendly show, so I'm not going to use the exact words that I want to use. But y'all, answer your phones.
Do it.
Return phone calls.
Pick it up. Pick up the phone.
Participate. Why are you checked out? It is September 25th. It is not time to check out.
It ain't the year to. It ain't the market to check out.
No.
Because, hey, and a few years ago, for a long time, really, you could probably make enough money in the real estate business to take off once September hit and kind of coast through the end of the year. But it ain't that kind of market.
No.
Get after it. Keep hustling.
Answer your call.
Go girl.
And you're killing me right now.
Well, and you're hurting your clients.
Yes.
And at the end of the day, we all represent people. Whether it's a buyer or a seller, you're hurting people.
Here's the thing. I have clients that don't believe me when I tell them that you haven't called me back in 5 days. Because
it sounds absurd.
It's absurd. They want to think that I just haven't called you to start with.
You're
making me look bad.
Yeah, right.
So do better.
All right, I got a pro tip for the listening audience that is not in the real estate business.
All right.
If you're thinking of, hey, kind of the beginning of the year, we'd like to buy a house. That's kind of on our agenda for 2025. Don't wait until then to start talking to a realtor and a mortgage lender and anybody else that you feel like you need to be involved, whether that's a CPA or whoever it might be for you. Go ahead and get an idea of where your numbers are and what you might do to improve your position, whether that's saving more money for down payment, consolidating some credit debt, paying down some credit debt, freeing up some debt to income ratio.
Ignoring this one, paying this one.
Go ahead and start that process. We can do a soft pull. Most lenders now will do a soft pull on your credit, so you don't have to worry about a hard inquiry on your credit report. And so you can start that process where a lender can actually get a viable credit score for you, get a viable debt to income ratio for you, and start that process without having to have a credit inquiry on your credit report. And that will give you a much better game plan as you're going forward.
Does that give you enough insight to also put stuff into your little simulator program?
Yeah, absolutely. I mean, we can do a pre-qualification letter on a soft pull credit report.
And so my point is if you do a soft pull on someone and they're at a 620, right, you can see and run the program from now until the end of the year. What can they do to get themselves to
I did that for
a 680 or a 720, or is it even possible?
I did that for a client this week, and she was, and I was able to model, and it's just a model. There's no guarantees on anything, but but the model shows that she could move her credit score from like 615 up to the 660 range if she does.
That's
things.
Huge,
and that's massive.
That's huge.
It's a big time game changer for their family, because now we go to a position where their purchasing power could literally go up I don't want to say literally and then not give a specific number. Their purchasing power could significantly increase if we're able to put her onto the mortgage, because now we can use her income. And she doesn't have a whole lot of debt. She just has a few things that she can tweak, and also sometimes it's just the passing of time.
Exactly.
From the most recent derogatory.
But the most important thing is that you hand them a game plan
Right.
and say, look, if you'll do these 2, 4, 8 things
Right.
between now and December 31st,
when we hit the market in January for you to go buy a house, you're going to be in a better position. So don't wait until January 1st to make that phone call.
y'all, that is massive.
Have your game plan ready to go.
That's right.
Because you might see a perfect house come on the market in November, and you want to be ready. If you're within 5 months of buying a house, then don't wait for 5 months to start the process, because the perfect home might come along in 3 months and you might miss it if you weren't ready.
That's it. That's a great pro tip. Okay.
I think we did it.
Was that it?
That's
That was it.
Sweet.
Short and sweet.
Okay.
To the point.
There we go. We got some fun things coming up. Always like to talk about that. So this weekend at Cedar Glade, we've got some music. We've got 3 parties, which is going to be fun. 3 class reunions, which is going to be epic. We've got our boards and brews, which if you've never signed up for that, you need to look that up. Sapphire
cool.
Wood Studios. They come in, you learn how to mix epoxy. You make these cool cutting boards and stuff. Hope and Hops.
Hope and Hops.
And
Thursday.
Oktoberfest at the Oaklands.
Oktoberfest at the Oaklands. I was about to say, let's
Yeah.
talk about the community out there.
Yeah.
And there's
Hope and Hops is going on out at Copper Ridge on Thursday.
I believe there's still tickets available.
I think there are a few. Yeah. So sampling and
there's
food
from like
and
5
drink.
to 9 too. So it's a pretty wide open window of time.
Y'all, and look up what DVSA is doing, Domestic Violence Sexual Assault Center. They are getting people out of bad situations, giving them hope,
Right.
by giving them safety.
Yeah.
And Erica over there is doing an incredible job leading that organization.
I spent 9 years on their board of directors. 6.
Oh, really?
6 is president of.
I didn't know
board.
that.
Yeah, and I used to always say that domestic violence is an unfortunate circumstance that plagues every community. It's everywhere. It doesn't care about your socioeconomic profile either. It hits everybody in all walks of life, and it's something that we don't like to talk about in public, but we've got to shine light on it. And we talk about spread the positive and shine a light on what's going right. Sometimes you got to put the spotlight on the stuff that's ugly so that you can try to fix it. And the Domestic Violence and Sexual Assault Services Program does an incredible job of doing that.
Amen.
And getting families out of really, really bad situations. I was present. There was a woman named Carla Dillard who was murdered here in Murfreesboro, and we had a big fundraiser within a month of that happening. And I remember going up to the podium and just kind of like almost choking up and having a hard time delivering my opening monologue because it was just so fresh and so recent that had happened.
I remember that happening.
It was awful.
Yep. So that's Thursday night. And then, of course, Saturday, the 10th annual Oakland's Oktoberfest.
10 years.
Can you believe that?
What a
Double
fun-
digits,
What
y'all.
a fun time.
It is. They put on a heck of a party. It's going to be awesome. Cedar Glade's going to be there along with a whole bunch of others.
yeah.
It'll be Mayday's last one.
Yeah.
They're going to be there.
Yeah.
That hurts my heart, y'all.
Yeah. It's tough.
Yep. They've been there since the beginning.
Yeah.
So anyway, lots of fun stuff going on. Hey, also, I want to throw this out there. So, Mayday's closing its doors at the end of November, or middle of November, whatever it is. Panther Creek is closing their doors, their tap room
5th.
doors, October 5th. That's soon. That's next week.
Yeah.
Y'all look, Bryan and I are partners here at Cedar Glade. And yes, we want you to come into our place, but over the next couple weeks, go visit these guys.
Yeah.
And go patronize them. Go make one more set of memories, or 2 or 3, whatever, with these guys. Give them a hug, give them a pat on the back, and let's just show the love as they go out.
Anybody who starts a business that takes that step out off the ledge to open up a business is I have so much respect for.
Take some guts.
And so give them a good final farewell, or not. Final farewell sounds awfully demoralizing, but just go in there and tell them thanks for taking that step. Thanks for moving the beer scene in Murfreesboro in this particular instance forward, because they all did.
Yeah, 100%.
And
Cedar Glade wouldn't exist without Mayday. I'm just telling you.
No, they blazed the trail.
And Panther.
Yeah.
I mean, they did it. They were just ahead of us by about a year, and they made it easier for us to do what we did.
Yeah.
So yeah, go love on them some, and then come love on us too, and Middle Ground out there on the other side of the interstate. So that's all I got. Trent, you got anything?
No, that was good.
All
to
right.
the point.
Thanks.
Good stuff.
Yeah.
See y'all
Have a
on the
good
next
rest
one.
of the week. Talk to you soon.
Thank you for listening to another episode of This Week in Real Estate with Jonathan Harmon and Bryan Nale, your go-to resource for all things real estate in Middle Tennessee. Be sure to like, share, follow, subscribe, and leave us a 5-star review. We will see y'all on the next one.
Now for the nitty-gritty. Primis Mortgage Company is a subsidiary of Primis Bank, a member FDIC. Primis Mortgage NMLS number 1894879, BK number 1042893, ML number 1894879. As always, all loans are subject to credit approval and product guidelines. Equal housing lender.